guys. Okay, so what's going on? What's going on? Good afternoon. Let me get a couple things pulled up here really quickly, so we can make sure that we're moving and grooving here. Okay. So first off, I just want to talk about MNQ obviously for today, right? Futures market just in general. We're gonna start talking more and more. Let me make sure I got the volume how I want it. We're gonna start talking more and more about our multiples, right, and price action from that perspective. But one of the main things today was just our overall bias. Okay, so I want to go into the bias. The bias was the understanding that we continue to talk about coming into the markets. Okay, and so when you look at a daily bar, right, when you look at a daily bar and you have understanding of supply, demand, and what you're looking for in those specific areas, right? For me, when you look at the day of the 16th, which would have been, what day was that? That would have been Friday, January the 16th, right? We had sell side. Then we had a gap to open the market this week. And then we had, this would have been Tuesday, right? The 20th, right? So yesterday we had a massive down day into where? Into the daily demand. Right, so as soon as we cross that key level, right, I anticipate people to be playing breakout shorts at the wrong location, right, because they don't understand what's low and what's high. And so what we were anticipating today on this daily bar was to see a 50% respect, right, of this area and to buys to step in. So everywhere 50% in here like this, we were anticipating buys to step into the marketplace, okay? And so now, this is something I was taught when I first got started trading, is news is the excuse to push price. And sorry, let me move my heater real quick. I'm not using it anymore. Okay. So news is the excuse to push price. So we already knew that we wanted to see buy positions on intraday time frames. Give me 1 second, guys. So we already knew we wanted to see price on intraday time frames go higher here inside that daily area. Now it's just about how they were going to do it. Now, when you go into a little bit lower of a time frame, right, and you start to look at pre-equities open, that's what I was really focused on today. So I'm going to actually jump over to the middle screen for today. When you look at that pre-equities open, right, what we were looking at here was price right around here, right? 8 a.m. So this is what we would have seen pre-equities open, right? And Donald Trump was speaking, I believe, at 7:45. I know for sure at 8 because price started to pump, okay? And so this would have been pre-equities open, 8 to 8:15, right? So still about 15 minutes before New York open, and price started to pump, right? Because Donald Trump's speaking, right? As he's speaking and things are coming out from the fundamentals, news is the excuse to push price. Right, that's something we always know. So to slow it down just a little bit, our goal on that daily was to see a response bullish, and we were wanting to attack this area here, which was the high of day, right? So the overnight liquidity, something that we target all the time, right? But as you can see, if I go back and I show the overall price from today, we attacked that before New York open. So now if you go back and look at replay mode, and then you look at New York open, which was here, we had already delivered the high of day, right? The overnight liquidity. So what that did was that put people in a position in their minds to want to go short, right? For me, what I was seeing because of where we were at higher time frame was that we still had the possibility to rally higher into the 350s, which would have been, if you look at a 1 hour, would have been this H1 supply, right? So we don't know if price is going to break structure or reach for previous day highs all the time. But what we do know is that if price is going to extend from an area like this and take the low end overnight liquidity, that you're most likely going to get a push up into the supply area of those 350s, right? Because essentially price comes down to buying low and selling high. The other thing that you want to focus on is what's a discount and what's premium, right? This is more of a premium area. This is more of a discount area based on how the overnight price had presented. And so the overnight price had already presented a sweep on this double bottom. So I love to see like an area like this that had been touched, right, get swept and then price that correct to go back into an area just like that. And so everything was setting up from higher time frame down, everything's fractal down to lower time frame to see a buy position at minimum up to here, I believe, right, to those 350s. And so with Donald Trump speaking, that really pushed the price a little bit early. And so what that does for me on a 15.5 down to, 5 minute, 1 minute is where I like to execute my positions. It puts me in the mindset of I want to play a bullish continuation, right? And so at the New York Open, if you look at the price, let me make sure we can see it here. Okay, cool. If you look at the price right here, this would have been 830 to 835, this 5 minute bar just right here, right? Then you have 835 to 840. Then you have 840 to 845. The best trades happen in the first 15 minutes or the last 15 minutes of the hour. So a lot of the manipulation happened right in here. So if you go into like a 1 minute bar, all right, and you look at this area from New York, you can see how they manipulated. Now, me personally, I ended up taking shorts as we rallied up higher, and I'll explain why I took the shorts. I took one scratch to get the short, and I'll explain why, and then I took the short to go against this massive push to the upside, okay? And so now on a personal account on CFD, I did take a buy position to rally up to this spot, but it just wasn't the volume and the R multiple that I would anticipate, that I had anticipated that I wanted to do. So the real trade that I took that really counted in my eyes was my short position on futures. And so what they did here was they came down, and this 835 to 840, this looked really good. I thought they were going to start building here. And then if you notice, it's very subtle, but what they did was they came and they wicked, right? So the 840 to 845 candle, it wicks down first, right? Taking out those individuals that have really tight stop losses, right? And respects, never closes bodies below those 150s or below daily open, showing me right there, that's why I watch daily open, is that the daily bar now has that potential to skyrocket out of that demand area, okay? And so where I think there was a really valid, I'll kind of go over like a valid area I thought that was pretty good, was when price shifted and price delivery and started to really push higher. So you'll get a 5 minute dump, a sign of strength, and then a second candle that took out traders, where I thought there was a really good opportunity to find edge, like we talk about R multiples, 20 handle risk, stuff like that, was right in here. And look at the timing, right? The timing was in the last 15 minutes of the hour, right? And you already had the understanding of context of if individuals, they pushed this price up here, pre-equities, and took, right, let's go back over here, and took that Asian liquidity, who's sitting here now? Sell side, right? Individuals with shorts, with stop loss break even, right, just sitting there, okay? And so when you go back to the smaller time frame and you look at how price action's actually playing, this is stacking bullish, right? Higher high, higher low, higher high, higher low. Now, when this candle printed just like this, and I'll run you guys through the replay mode because this is more of a hypothetical until I show you guys the short position that I actually took. This is the area I thought was really, really nice because you didn't know what was going to happen right about here, but what you did know is that price was printing above New York Open, right? It halted, it never went and closed below 150s, never closed a body on that 5 minute below the daily open, and those are signs for me, okay? But then the next part of the trade was when price went right here and extends higher. But what does it leave you, right? What does it leave you? It left you a down candle in an uptrending market. Now, if I go and plot a position really quickly, what I'm gonna do is I'm gonna take this like this, and I'm gonna use the simultaneous tool so that I can just plot this position. Say I wanted to enter right here, right, on a buy position, and I want to show you the location of what this looks like on a 4 hour, okay? So I'm just gonna do it right here actually. When you look at a 4 hour time, a 4 hour bar, if you're taking a trade in that area, right, you're still relatively in almost a 4 hour demand, being inside that 25,200 level, okay? And so that's still a really good trade if you can define edge on intraday time frames, right? So what we were seeing here on the 5 and 1 minute was the fact that, okay, cool, price is going to continue higher. And then the other thing is if you can define edge in this situation, so I was looking at something like this, right? Getting in on a pullback back into the demand, putting my risk at prior bar low, which would have been here, 15 handle risk, right? You guys can see that 15 handle risk. And then my target was on the 1 hour, right? Going up to where we talked about supply, right? We wanted to see that supply. So this area here, I'm just going to draw a line here so you guys can kind of see it, was at minimum see price go up to here, right, to exit our trade, because we like to exit our buys inside supply, and we like to take them inside demand. And so when you look at this and you target, let's say, what would this be? 25 361s, right? So target profit level 25 361, 361, right? Up to that supply open, if that makes sense. You're looking at almost a 1 to 10 trade, okay? So now let's say price comes back down here. Bam, let's say you get into the trade, right? We like to use 5 contracts on the initial. Stop loss would have went in the area that I show, right? And that goes to what I want to talk about too, is R multiples. I'm willing to risk $200 to $400 in a setup, right? I really like to keep it around 200 and then 400 a day. So if I lose a setup, then I take one more and that's it, okay? And so this setup right here framed up really nice. And if price moved in the favor and took out the shorts, it was going to be really good, because then what you're trying to focus on when you're setting up R multiples is as price moves into your favor, right? In a situation like this, right? If I'm risking about $200, when I'm at about $400 in profit, now I can go ahead, right? Because I'm at a 1 to 2. This is my rule, right? I can go ahead and condense that down to break even and have no risk on the trade, right? And you want to account for your fees, okay? And so for me, that's how this played out. That's how the personal position worked out. And then we only wanted to see price move up to that supply area, 25 361. Beautiful setup, okay? And this would have been the continuation if you missed somewhere down in here, or you just couldn't really define edge. This was a beautiful setup, because one thing you have that's really key here was the shift in price delivery, right? On this 1 minute, right? You see how the bar actually closed higher open, higher close, right above New York open, showing signs of strength. Now the key was here as well, is you want to be marking New York highs and lows. This line right here was the New York high, right? So why do we mark that area? Because individuals are going to put their risk from the sell side from New York open right at that New York high. When price starts to move down, they use that as their risk. So now you're taking a new high on day, you're already break even, and you're trying to reach up for previous that previous supply. Okay, so that was awesome to see that. But like I said, I didn't take that exact move on futures, and I was just watching it play out in agony. Okay, and so small position on CFD, but not the position on futures. And so that was the plan. That was the best move I thought of the day, unless you somehow took it down here at the 842, which I think there really wasn't that much edge to end up taking the trade. And so as it pushes up into the supply, the next target that we wanted was that previous day high. As you can see, that previous day high was like 25,441s, right? So there's a way to manage this, like we always talk about, following last down candle in the uptrending market. So you had one here. We go back to 5 minutes here and really can kind of see it. As you were in this trade and it starts to push in your favor, I mean, those 5 minute bars, they kind of showed some resistance here in that 300 level, right? So it just kept climbing, right? And then what did price do, right? Price started to show some weakness there. You're still break even. There's no 5 minute weakness though yet. Like, there hasn't been a 5 minute candle to me at this point that's closed bearish under this low. So I would still be holding on to this. Now, if you wanted to condense that risk down, right, using that 5 minute bar, what you would do is just take it and use that 5 minute low, right? You see I'm using that 5 minute low to secure. You could use it right there. I personally like to use that 1 minute area like that and align it just like this. Now, in that next 5 minute bar, 9:10 to 9:15, what happens, right? Price continued to go higher, right? And look at the highs. These were weak. These were 1, 2, 3. So anybody selling inside of that, they're putting their risk in what's called resistance, essentially, right? And so now that price continues to rally up, right? Kind of stagnates there for a second, shows some weakness away from the area, and then holds support here at those 300s, and then just ends up ripping those highs, right? Boom, new highs, okay? But what do you get in this situation when we talk about trailing risk? You've got a new down candle in the uptrending market, right? Because if we look at a line graph, price is clearly making new highs. Price has clearly left you a new down candle. So now what you can do is you can trail that risk, right, to secure a little bit more on that trade, right? And you continue to watch 5 minute, 15 5 minute, 1 minute bars up into the 1 hour and 15 minute supply area, right? And this thing rocketed, okay? Like this thing continued to rocket and ended up taking our favorite target, previous day highs. Now you can go back and you can study that area. I thought that was like the move. And what this can do is it can create FOMO, right? It can create FOMO because you're like, damn, I know that move's gonna play out, but you just have to be thinking R multiples and edge, okay? So the move I want to go over here really quickly though was the actual move I took, because I do want to kind of show what I anticipate for the second half of the day, and I do think that they're gonna rally that thing back up into the potential highs, okay? And so the move that I ended up waiting for was the delivery of the liquidity, right? Buy low, sell high. Understanding where buyers who had been holding their buys since 25,050s up into the 25,450s, so they're up what? Let's just say they're holding from like when Trump starts speaking to here, almost 400 handles. They're going to start exiting those positions, right? They're going to start exiting those positions. So what do you expect to happen? Shorts, right? The only way for a buy to exit is if they actually have limits set somewhere. So what I mean by that is like this. A lot of people probably had, limits set right here, right? Inside, right above these highs. And then if they had other TPs, like we like to always target, they had their limits set in alignment with the previous day high. So when you're wanting to find shorts when buyers are exiting their longs, right? And so that was a beautiful move, I thought, to get up to that area. And I was kind of spazzing out because I was like, damn, I mean, they're going to move this thing 1, 2, 3, 350, 400 handles and not give anyone a chance. It's crazy, right? And if you didn't take that move that I showed in the very beginning. And so what I ended up finding was the sell side move, right? That the buyer's exit. So the first move that I attempted and took, right, was we had a 15-minute fast up candle, and then we had my signal, which was that first 5-minute sign of weakness, right? So this 9:55 into 10. I like to take trades in the first 15 minutes of the hour or the last. And so where I took the first one, it actually gave me a scratch, was right here. I ended up seeing this position, 9:55 to 10. Then the candle opened at 10 to 10:05. I ended up taking a trade right here. I had a pretty good risk on the trade for R multiple, right? For about a 20, it was a little less than 20 handles. And my target was to get back into the imbalances, right? Back into the IB. The IB was back to 25,250, right? So the initial balance where we started the day, right? So even getting back below, 300s was awesome. That's what I was looking for. Now, as you can see, what happened here, 10:10 to 10:15, they spiked the price up and ran the highs one more time, right? So because I had only took one setup, and that was my risk, was $200 on that trade, I took another setup on that 5 minutes. So the 5 minute ran up, slips the highs, right? Creating that FU formation, that crown form. And then I ended up taking a trade right here because I was looking at this from risk to entry mindset, right? So you're thinking from where your risk is going to be, which would have been that wick high, right? And then you count down 20 handles, and looking at how this had formed, I had liked this area right here. Like right when it popped these people out, and this is in that first 15 minutes of the hour, I liked how this was starting to look, and I ended up risking right here inside that 1 minute candle with the same idea to get back into IB, but you had to remember I had experienced the loss, right? So my target on the trade was to get from my entry that I had here, like 475s, and all I essentially really wanted was those 350s, and that's where I ended up being out for the day. So risked 200 on that first one, lost, and then came back and was able to factor into this trade for about 100. It was like 123 handles, which ended up putting me green for the day, right? So win one, or lose one, win one, right? But I'd say the biggest thing of the day was just the FOMO that they created inside the marketplace pre-equities open with Donald Trump speaking. And like I said, that's where you start looking at the prices. News is the excuse to push price to hurt traders, okay? And so where I could have got better though today on this setup is, one, not experiencing that loss on, you can't predict that they're gonna fly a candle and up thrust one more time after. It's just part of the probabilities. But what I could have done better on the risk management was when price actually reached my level here on this 1 minute. So I ended up taking the trade. I'll show it here. Okay, so replay mode. And then we ended up getting in right in here. So like this is pretty much the trade. So I ended up taking a trade right here, right? Had the contracts right there. Stop loss was at the high of the market. And then we were looking for, why didn't it move our stop? Oh, excuse me. So trade here. I'm going to change this to sell. Sorry, I didn't realize it was on that. Market, and then we want to do sell. No, I wanted to, where's the sell? Oops. Market, sell. Okay, so sell, then we had our stop loss here, right? And then when price started to move in my favor, I'd say the difference was when price actually did move down, like it actually started to break down. Like after this 1030 to 1035 5-minute bar, this is where I started to manage, okay? So price started to move. This would have been 1016, so 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, right? So there was like right in this area I was still holding. Now when that price extended lower right here, right, I started to wait for this 5-minute bar. I want to see one 5-minute bar print lower. So this was 1030 to 1035. When this last up candle and a downtrend essentially market was starting to ensue, that's when it's the same plan that you would use if this was a buy, right? So last up candle in a downtrending market, you can start to use that as your break-even point, right? You can move your risk to right there. And so price started to fall in favor, and I needed to watch 5-minute candles open and close, and then I needed to look for up candles in a downtrend market as edge to trail my risk. Now, because I had already lost the trade, my eyes were just locked on target, right? So it just depends on the type of day that you're having. But this would have been 1032, 33, 34, 35, right? And as you can see, it's very hard to see, but if you wanted to really condense down, you could start to trail your risk. Now, I'm only going to start to trail my risk in this situation as we got closer to target. And so this would have been 10, 36, 37, 38, right? And now we're at target, right? So for me today, any type of move up from this point, what I could have done better was not manually exit, right? Because if right here I have a prior bar, right? 38 to 39, there's no signs of strength. All I needed to do, instead of, getting out for a small profit, all I needed to do was just take that prior bar, trail the risk to here, okay? And then let this continue down back into the IB, right? Which was back into where they broke the previous high on day, right? The initial balance, and back into side point of interest and side demand. And that's how I could have squeezed out a lot more, profit on that sell side. I'm still happy with the green day. I'm still happy with, the day overall. But there's always a little bit better you can do to execute a little bit better to get better, okay? And so as you can see, that price continues right here. What was this? 1041, 42, 43, 44. Now, guys, what do we got? What do we got on the downside, right? We have a up candle in a downtrending market. So that's another key to go ahead and trail your risk down to secure more of the bag as you get closer to a downside target or back into initial balance, point of interest, demand, or etc., right? Wherever you're trying to get to, even possibly the low of day, right? Now, I'm always playing back to daily open. That's always going to be a point of interest I really love to play to, but I'm just kind of showing you guys how I could have managed this better as it started to move in my favor. And so price continues here. This would have been the last 15 minutes of the hour for 10:45 going into 11. So 10:45, 46, 47, 48, 49, 50, 51. Now boom. Now look at this, guys. This is structure. This is all structured. That's a new low, right? You have up candles in a downtrending market now, right? Trail it again to that high. And you only want to trail it as the market makes the new body candle closure lower, right? You don't want to do it as it's kind of wicking or kind of showing. You want to do it as it's actually the body candle opens, closes, trail risk, right? And so now we're moving in closer to our target, which I'm going to move this out of the way, which would be back to, like I said, initial balance, which we were already back now at this point into that initial balance coming into this level. and coming into this blue line. Like everything below this blue line, this key level, if you guys look left, this would have been the original high on day. We're coming back into that area. Also New York Open in 25,200. So instead of just taking yourself out, why I'm showing this is because you can actually maximize your profits by trailing risk based on management rules. Okay? And so price continues to go down. This would have been 10.52, 53, 54, 55. Bam. Do you have a new up candle in a downtrending market? Awesome. Cool. Squeeze out more, right? So as you're moving lower down the range and looking left, you have to be paying attention to structure, okay? And so bam, this would have been 10.56, 57, 58, 59, 11, right? So right here, what you could have done, right? You could have trailed some more, or you could have left it here. Either way, right? Now, me personally, I would say the better management rule would have been this would have been it right here, right? So this right here, that would be the move. If the price goes through it, it's over with, right? Bam, you'd be done for the day for a nasty profit. So, like I said, still green on the day. You know, took a little bit of experience, a little bit of loss on that first attempt, right? Because I thought it was a pretty good attempt on the 5-minute area. Got, you know, ran right here and then ended up taking that short here at 10.14. So that's perfect, first 15 minutes of the hour. And then had a 20 handle risk. Our multiples were good. Just could have, instead of just getting the target and manually pulling the position, right? Trailing risk based on prior bar. Okay, so if you guys have questions on that or anything, just DM me and I'll go over that. And then what I wanted to talk about on the second half of the day here for at least 15.5 is going to be how price is presenting now, right? Because what did they do? They came back all the way, right? They've come back all the way here at 11 to 11.15, and then 11.15 to 11.30, and they're starting to hold demand at this 25,200 level at point of interest, right? And so, essentially, to me, the people that have the most to lose in this situation at this point are the individuals who are sell side, right? Now they could easily topple over, right? They could easily topple over and continue down the lower day below New York low that hasn't been tested yet, and below daily open. But what I'm looking at going into the end of the day on 15.5 is going to be demand, right? Going into this area here, and I'm watching price action and structure inside this area here, right? So if we continue to find some areas that can hold in this area, then I'm looking at this candle right here and I'm saying, if price can continue to, you know, go like this, higher high, higher low, higher high, higher low, and continue up, then you do have a potential to see the sell side area, right, 25,500, be attacked. But I'm not so for sure on that, just based on what they've been able to do today. Plus, I'm not in the markets anymore. But I think today was pretty crazy. When you think about our higher time frame bias, we were looking for a daily bar to bounce out of that area, like we talked about, right? And here, right? So if we look at it from this perspective, we were looking for a daily bar to pop out and start to, show some bullish strength. And we ended up getting that, right? That big push up was pretty crazy. So now, like I said, it just comes down to what's high and what's low. And then the context of the overall setups, right? And so for me, if I were, to be looking for more setups going into the second half, I would be using this 5-minute area like this. So I'm going to show you guys on the, I've showed you guys the 15-minute demand area. So I'm going to show you guys on the 1 minute just so we can have an idea of like a little bit tighter structure here. But I'd be looking for this 5-minute candle to be acting as an area of demand potentially. Right, not saying that it has to, just saying so I can define edge and look for R multiples, and then as we're inside these type of areas, at the right time, right, coming in here to 10:45, right, they've already showed the sign of strength with this candle here on a 5-minute, so this right here, right, that little sign of strength. So now it's like, is there potential to continue to use edge to find your way up? For me, I just don't see it as strong. Right, and I just don't really personally like how we left this like essentially a W pattern at the low of day, right? But based on how the price looks right now, I could definitely see them potentially doing that if they don't go down first. and run this low of day and then reaccumulate in the second half of the day a little bit later. But I thought the sells were pretty good, so it just depends on what you took. I don't know what individual trade you took. Maybe you took buys on that way up, and your location really, it just really depends on your location to me, like where you entered, right? Because a lot of people, what they're doing is they're taking trades at a breakout area. Me, I'll be patient. I'll wait for the area. I may freak out, sometimes like from a FOMO sometimes, and you got to really be able to control yourself. But this area here, when you look at 1050 to 1055, a lot of traders bought the breakout area. They didn't buy it down where they should have, right? Like when we're looking at like a 1 minute, right? They bought it as like, I'm saying to buy it in here. People are buying it in here, if that makes sense, as it's breaking out, which, to me, you're going to have to put your risk at a prior bar low. You don't have to, but it just works out a lot better. So it's just, you're defining the edge. Do you want your trade to be R multiple with edge, right? Like this, where you can frame it and go higher? Or do you want to be inside of an expansion, right, at a breakout area of an old high, and now your risk essentially would have to be almost 40 handles to the most prior bar low? So that's the difference in, defining the edge, the timing, and the location of where you're trying to get in. All right, so everything's fractal. So I thought that this was a pretty good area to buy it, depending on where you did it. Here's great. Up here is like you're susceptible to a lot of risk. Okay, and then went over the short side again. Like I said, there's gonna be times when, and remember this too, a 5-minute wick candle. So this candle here, right? A 5-minute wick candle, if you go study price a lot, like this, right, is going to be a FU formation. So essentially, I'm not trying to like flip you guys off, right, but it's going to look like this, okay? And so it's going to look like that because what it's doing is it's stopping people out, right, really fast, and that's what it looks like. It turns into what's called a crown form, right? And then you get the mitigation, right, here at the 1028, which was like that London close time, 1030, and then price capitulates and falls over and rolls back into the initial balance. So the buys up right here, thought were awesome, and then had to take a scratch to get a win here on the sell side to end up still pumping out that green day, which is we're not always going to be green, right? We're thinking R multiples, but yeah. So I'm gonna, like I said, I'm working on releasing that video that goes over the risk reward ratio chart and talks about how to think in probabilities and how to set up R multiples when it comes to NQ specifically. I can show you guys YM as well. I can show you ES, but the one that I know the best and the one that I know the exact numbers, etc., to frame up are going to be on MNQs and NQ. So pretty good day overall. Like I said, just don't feel bad if you missed out on that buy or had FOMO. I know a lot of people too would buy something up in this area, but you got to go back and just look at where you're at when you're buying a situation like up in here, where you're at when it comes to supply and where you're at when it comes to premium and discount on the day, right? So if you're plotting a position, because I know I had a message from someone that said they bought in here, right? There's nothing wrong with that. It's just like, look how far you are and how close you are to where areas that buyers have really good positions where they're most likely going to exit. They're going to exit inside of the supply or right above the area where people put their stops. And so there's still edge. I want to go back and kind of show that, right? Because there is still edge in that area. And then the timing, I would say, would be the difference maker. So 9:10 to 9:15. So you're looking at, this would have been 9:10. You're starting to see price go up, right? It's just the fact of how they did it. I would have had to see this candle 9:10 and 9:15 close, and then them go through that 350s levels, and then wait for price to turn. And as you guys can see, this was like 9:22. I'm most likely not taking a trade in there, and based on the location. So the timing wasn't right, and the location, and so that's what made me, not look at this as like a valid area that I would want to take for criteria. Now, can you make money off of a situation like that? Of course, right? Like, of course you can, but it's just the timing and the criteria of being selective in your selection. It just didn't look great for me. Okay. And so, like we talked about here, 15.5, I do see them holding this special candle here, so I don't want to highlight both, but I want to highlight just this candle right here and over to the end of the day. All right. So if you're looking at something that we can come back to and look at for what happened going into the close of today, I could easily see them pumping price back up to this sell side area and back above the current high of day. Okay, so I appreciate you guys watching. Let me know if there's something that can help, audio, visuals, whatever. But be on the lookout for the R multiple video, because that's really going to help when it comes to MNQ on how to set up the trades from a 15, 5-minute, 1-minute execution window, and then having the higher time frame context of supply, demand, and understanding where individuals get out of the markets when they're in a short, and where individuals are going to get out of trades when they're in a buy position. Okay, so let's see if they pump the rest of the day. But I appreciate you guys watching, and I will talk to you guys on the next one.